Markets not always run on rationality or on logic. Most of the time, they run on human emotion. In today's episode, we're going to talk about the two sentiments that drive markets and how to better control them and take advantage of them. Thank you for joining me to another episode. Today is going to be a short and sweet episode, and it's generic. It doesn't apply only for Bitcoin, but to every market. And that is how to control the two sentiments, two human emotions that drive most of the markets. So maybe you have already heard about them, but basically they are fear and greed. Before we go to fear and greed, let's start with the nature of any market. Any market is basically humans trying to determine a future price or a fair price for something where you are trying to predict its future value, its future performance. So you need to understand that in any market, there are two sides of the same coin, which is risk and luck. You can be very lucky gambling and not knowing what you're doing, but that's not what will be an advisable form of investing. If you truly want to invest, you're trying to apply some logic and some fundamentals to your decision making. And when you're doing that, you're not playing with dice. You're basically not gambling. You're trying to predict the future, but the future is not certain and the future has risk. So that's the flip side of uncertainty and luck. It will be risk. Now, especially for a market like Bitcoin, being a very volatile one, you want to be able to mitigate the risk as much as possible. How do you mitigate risk? Is basically by you learning about what you're getting into. That's the reason why I never say just buy Bitcoin, but study and learn Bitcoin. Because once you study, once you understand what you're getting into, it's a way for you to mitigate a little bit the risk that you're going to get exposed to. Now, even though you may have done your analysis, even though you understand that Bitcoin is the scarcest asset on earth with 21 million coins as a supply cap, and even though you know that it is now getting more adopted, that now with the Fed rate cuts, it is supposed to drive even more demand to it and even more price appreciation to it, the reality is that no market is completely rational. No market just drives based on technical analysis or charts. And you need to understand that at the end of the day, every market is driven by people, and people are emotion driven. So the two emotions that you need to understand that apply to any market are fear and greed. On the one side, greed is basically what drives everyone crazy, is driving everyone very excited about some potential upside of an asset. That's when you get into the whole FOMO stage where everyone is borrowing money to get into a market. Everyone is doing crazy predictions. You start hitting some all-time highs. You see people buying new watches and new gadgets and new cars, getting into riskier assets and riskier investments because they believe that this state of high performance will continue forever. And that's the greed sentiment. Is people just trying to get more out of it. And on the flip side, you have fear. And fear is basically not knowing what's ahead of you, operating without any kind of certainty, any kind of conviction, any kind of rationality. So I'm not gonna say here, please remove yourself from these sentiments, rather just acknowledge that they exist and they drive a lot of the market price changes. And fear and greed are one of those things that, again, you can see, you can time to a certain perspective, but it is very hard to actually control them as emotions. The way for you to control them is by actually having a disciplined strategy towards your investment entry and exit points. So my recommendation when you are getting into a volatile asset like Bitcoin is don't get all in to it. Rather, study Bitcoin and take a gradual approach, which in this case will be a DCA, a dollar cost average, where if you have $10,000 to invest into Bitcoin, you don't go like an idiot day one and just spend the $10,000, because tomorrow Bitcoin may dip and you will be regretting that you made that investment. Maybe you will pull out, and only to be disappointed because the day after it bounces back and you're feeling like an idiot because you went all in. So the way to do it in a more systematic, more disciplined way will be to dollar cost average, which means out of the $10,000 or 10,000 pesos or whatever you're thinking to invest, don't invest them all at once. Basically, spread them out in systematic investments for you to get into the price action of Bitcoin. And if you're spreading that investment across 2-3 months, and you're saying, okay, I'm going to invest $500 every other week, or whatever the amount you can afford, basically by doing it in a recurring manner, in doing it in a systematic manner, it's going to allow you to capture the ups and downs of Bitcoin. And what needs to remain true is your conviction about what the asset is, what the future holds for it as far as more adoption to a scarce asset. And the same applies when you're trying to exit the market. You don't just cash out on the first news of something going south. Basically, you want to take profits and do it in a systematic manner. Now, it's easier said than done. So how do you check what is the overall market sentiment happening at this current time? You can see it sometimes on the headlines from news. You can see it on Twitter. You can see it on basically social media, how people is either euphoric and just saying, okay, we're gonna hit these crazy numbers in the next couple months, or if people are just fearful, are with a dire sentiment of this is going south, are already saying, okay, I made a mistake, or how will I pay for this or that. So that's a first kind of thermometer that you can use. But at the same time, there are a couple tools that I will show you today that try to reflect overall market and crypto market fear and greed. And these are the fear and greed indexes that I'm going to show you right now. Okay, so right here, I'm in cnn.com/business. This is where it's a subset of news articles related to the business, related to markets. You can see how it has in general some high-level indicators of how the market performed. But look at this, there is a fear and greed index, and it has a gauge which right now is indicating the market as of September 21st of 2025 is in a greed state. Now, it's very easy just to see this gauge, but if we click on this, we can actually get into a historical view of this fear and greed index. And right now it's at 62, which is indicating greed. But you can see the historical sentiment as well, where a week ago it was in neutral territory, a month ago it was in greed territory again, a year ago it was in greed territory. So at least when it comes down to equity and bond and credit markets in general, this index is indicating greed at the current stage. Now you can see that this is the summary of all different variables that these guys are taking into consideration, which are broken down underneath this graphic. So you can see that there are 7 fear and greed indicators. The first one is market momentum. Right now is on a greed stage. You can see what it means and how it's calculated. You can see the next one will be stock price strength. Right now it's in extreme greed, and you can figure it out because of the all-time highs, because of the furor that is going on with equities right now. You can see stock price breadth, which right now is on neutral stage. You can see put and call options right now in extreme greed. There is market volatility, which is in neutral right now. Safe haven demand, neutral. And junk bond demand, which right now is on fear territory. So again, this is not any kind of technical analysis, because rather it's trying to calculate and estimate market sentiment. And the market sentiment right now in general is on the greed side of things. Now, the same approach or the same approximation has been tried to be reflected for the crypto markets. So I'm going to show you this other tab that I have open. It's a page called coinmarketcap.com. And again, it will show you, in this case, instead of just equities, actual tokens by market cap. But right here, you can see the fear and greed index when it comes down to the crypto markets. And if you click on it, as of today, it's in a neutral stage. And you can see historical values from yesterday in neutral, last week neutral, last month neutral. And it's no surprise, because the reality of the matter is that Bitcoin has been mostly chopping sideways for the past few months. But you can see how also on a yearly high and low, last year around November, we were in extreme greed. And this year around March timeframe, we were in extreme fear. Now, how is this calculated? If you break it down, there are a few indicators that they use as well. So price momentum, volatility, derivatives markets, market composition, and some proprietary data as well. And again, how can you use this index? It's basically to analyze market sentiment in general, contrarian strategy, and I'm going to talk about that in a second, and some complementary analysis. So again, this is not technical analysis. This is just some indicators that are tied to how we think people are reacting to markets. And right now, it's at least on the crypto space indicating we're in a neutral stage. So we're neither in a fearful stage where everyone is selling and everyone is pessimistic, neither are we on a extreme greedy stage where everyone is just trying to make easy money. So now that you have seen these two gauges and these two indicators, how can you play these two sentiments in your favor? And there is an old saying that goes, be fearful when everyone else is greedy, and be greedy when everyone else is fearful. Meaning, if you have done your job, if you have done some research, and if you have studied, in this case, Bitcoin, for you to understand what you're getting into, which is, yes, a volatile asset, but it's an appreciating asset that only has 16 years of existence. And it has certain characteristics that makes it better money than our current system, our current fiat system, or gold for that matter, in terms of scarcity, fungibility, durability, transmissibility, portability, and ultimately transparency as well. You understand that this market sentiment will drive up and down the price, but if you're truly convinced on your approximation and your strategy for acquiring a certain asset, you can actually take advantage of these two gauges when things are in a fearful stage. Well, if you have conviction, that is an opportunity for you to get into the asset and buy at lower prices. If everyone is euphoric and everyone is trying to get more all-time highs and easy money and already trying to borrow money to get to the next wave of the new all-time high, you know that most likely that cannot be sustained long-term, and that's when you need to be a little bit more conservative and be fearful when everyone else is greedy. In any case, this is not financial advice. This is just for you to understand these two levers of human emotion that play a huge factor into markets, and hopefully you can take them as a tool to use with your Bitcoin knowledge and your asset knowledge to your advantage. In any case, this has been an easy episode, but one that is super important for you to understand and dominate if you want to actually perform well in any market, not only the crypto markets. So please like, share, and subscribe if this has been useful. And until the next one, see ya.